Hi, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we are looking at the analysis on the Euro JPY and headlining. We've seen that Euro JPY has been attracting some sellers below the mid 163s, and the Eurozone PMI data looms. We are expecting the Euro JPY loses momentum around 163.22 following the rise in Japanese CPI inflation data. Now, the Tokyo CPI climbed about 2.6% in February, prior to 1.6%, while the ECB is anticipated to hold the rate steady at 4.5% at its March meeting on Thursday. The Euro JPY cross loses ground below the mid 163s during the early European trading sessions on Tuesday today, and the rise in the Tokyo Consumer CPI index for February has triggered speculation that the Bank of Japan will exit the negative interest rate regime in the coming month, which lifts the Japanese yen and weighs on the lower. Euro USD currently trades near 163.22, which is down about 0.1% on the day. Now, data has been released from the Statistics Bureau of Japan on Tuesday, which revealed that the Tokyo CPI climbed 2.6% year on year in February from 1.6% in January. Additionally, the CPI ex fresh food and energy eased to 3.1% year on year in January from the previous reading of 3.3%, while the rise in price growth above the central bank's target in February has supported the case for the Bank of Japan's first interest rate hike since 2007, and this in turn has boosted the JPY against its rivals. While the Bank of Japan board member Hajime Takata hinted at a potential early move by the central bank to abandon its negative interest rate, and it has been stated that the price will not now redeem, and it will be appropriate to change the monetary policy stance. Nevertheless, we are expecting Bank of Japan Governor Kazuo Ueda delivered a cautious view, saying that he would evaluate more data in order to confirm that a virtuous wage price cycle is currently emerging. While on the euro front, we are seeing that the European Central Bank ECB is expected to keep the main refinancing stage steady at 4.5% at its March meeting on Thursday, while ECB President Christine Lagarde has said last week that disinflation would persist, but the central bank needs more evidence data before lowering the interest rates. Meanwhile, investors would take more cues from the press conference. A less hawkish tone would exert some selling pressure on the euros and create a headwind for the Euro JPY cross. Now, later today, we are expecting the ACBOB PMI data from Spain, Italy, France, Germany, and the Eurozone will be due. And the Eurozone, of course, retail sales will be released on Wednesday. Market players will closely monitor the ECB rate decision on Thursday, while this event would give a clear direction to the Euro JPY cross. Now, with all this being said and done, we have a technical view inside, and we are expecting much more hawkish than expected. We have a very important zone here, which is 162.977, and we're expecting a push up to at least to touch this resistance at 163.498, and this would mean a new zone. Of course, it might exceed that and head to the highest resistance in the past 2 weeks, which is at 163.683, which is 50 pips from that point, of course, which is good money. Alternatively, a surprise from the Bank of Japan showing some good interest might mean that the Japanese yen is going to overtake the the European currency, and we're expecting probably to touch the 162.709 axis, which from this point is about 56 to 60 pips thereabout, of course, which is good money. And that's our technical analysis on today's currency pair Euro JPY. I remain your host, Nick. Now let's move over to the stock market. Hello, welcome back, guys. And on today's stock market, we're having a look at Spain 35. Headlining, we're seeing that Spain's Amadeus expects 2024 revenue growth raises about 223 dividend. Now, the Spanish travel booking group Amadeus said on Wednesday that it expects its revenue to grow between 11% and 14.5% this year after a solid 2023, boosted by the world travel post-pandemic recovery, which allowed it to raise its dividend by 2/3. We're optimistic about our growth in 2024 and beyond. Chief Executive Luis Marato said in a statement, adjusted net profit last year had jumped 60% from the previous year out of revenue, which rose 21%. Amadeus has said as a result, it raised its dividend paid out of 2023 profits to 1.24 euros per share from 0.74 euros the year before. Now, Amadeus is one of the few companies in the sector that has resumed the dividend after the pandemic and has not yet said anything about it. We're expecting Amadeus shares, which is 0.2% in early morning trading and recouping earlier losses, while the IBEX blue chip index was down by 0.1%. So after a 2-year pandemic slump, Amadeus has continued to benefit from a leisure travel boom despite high inflation rates and tightening monetary conditions. Now, the company has signaled a slowdown in the fourth quarter as booking cancellations rose due to the geopolitical situation in the Middle East, mainly in North America, the Middle East, and Africa. Now, the recovery in global air traffic during the fourth quarter has continued, albeit at a slower pace than prior quarters. In 2023, we are still 22% lower than during 2019. And this, of course, has been having a shape on the Spain 35. We are seeing a bullish run going, and 1019.464 is where the target is, the highest resistance, of course. And hopefully a possible breakout of that zone will mean we're heading to the highest high for the year, last 2 years, I mean. And 10289.93 should be in the look, which is about 1,200 plus pips from that point, of course, which is good money. Now, that's our technical analysis on today's stock market Spain 35. I remain your host, Nick. Bye for now.